All right, so now we are being recorded. So if you don't want to be seen, now's the time, such as me, now's the time to kill your camera. Let me dismiss this. Habib, I think I saw you join. Long time.
Yes, it's
Haven't
been.
seen
I
Nick
didn't
in a
realize
while.
that these were. Yeah, I didn't realize that this was like a. I saw the replay of the demo from a week or
Okay.
so ago. It was really good, so I thought I would join this time.
Well, thank you. Good to see you. Good to see you. Well, good
So I
to
got my
hear you.
camera off.
I'm not. So, well, yes, we do these. This is an unusual one. So, because I've got a conflict, I've got a trip Saturday. I'm going for a week to Hawaii. It was an invitation from my brother-in-law. He said, "Hey, you guys want to come join us?" I mean, you can't turn that down. So we're going to go out there. So and I've got stuff then that has to be done before we go, and it's interfering with the normal 2:30 p.m. Eastern time block. So I'm going to do this. So thank you for those of you who figured it out beforehand. So, and the two rules, two ground rules, if you haven't done this before, are A, mute yourself if you're not asking a question, and B, please ask lots of questions. I've got I always come with sometimes a better one and sometimes a worse one game plan of what I want to cover. But we'll take as many questions as possible. That's always my aim. I want to, to the best of my ability, answer questions. We don't give advice, but we sure want to help you use the data to best effect. And I've been trying, I experiment with different things, and I feel very good about the things that we have been doing here lately. And I do what we put in what I write in the notes. I write the notes, and I just follow what I tell you. So let me get through a couple of things here. The next demo is September 15 because I'm going to be out next week. So make note of that. I think Calendly only gives you 10 days in advance, so it doesn't show up yet, but it will be as soon as we get to September 5th, it should show up. And so that'll be the next one. Then here's just another interesting, I think is a good beginning point. My principal aim is to give you examples, to go through the pre-market checklist, the things that I do, and many of you are better at it than I am now. You've gotten very good at doing this. I feel good about what I'm doing. I'll just share what I do with the math. But I think this is a good beginning point today, which is energy, because it's an illustration of how quickly things go from long to short. So here's what I mean. If you look at the energy sector, which Monday was the only good sector. If you backed up to Monday, which would be, where's that? Right about here, the 22nd. So is that right? 22nd? Got that right? No, no, 20. Let me think through this. 27th, 28th, 27th. That's what I mean. Okay, so the 27th. If you looked at this data, let me zoom this in. You've got rising demand, falling supply. Only thing in the market that you could look at and say, well, there's some opportunity. And so that's what I bought. I was, I'm looking at the broad sentiment, and so I also bought some big and stable stuff, and I don't have many positions at a time, typically. More size, fewer positions, and that has been working well. But notice how quickly it changed. And this is how you have to be pretty nimble. I will reiterate that it's apparent in the data, no matter what angle you take to look at things, from the way we help public companies and how quickly. I was just looking at some data for Tupperware. What happened in the 1 week period around their earnings. What was occurring on the 2nd of August, and where were they 5 trading days later on the 9th of August? And the stock was up 50%. And what did that? And how quickly those changes occur and revert, because there's no liquidity in the market. That is a fact. It's very difficult to get trades done. I experience it all the time. I sold Hershey last week, and one 50-share trade, just 50 shares, broke into 6 different trades for 6 shares, 9 shares, 10, and something else. I don't remember off the top of my head. And so I got, those became ways for high-speed traders to price the entire market. Well, that stuff's occurring all the time. And it's very difficult to move large positions. And that dovetails with something that I wrote Wednesday, which, you look at the SPY data, and it's apparent that stock pickers, people who are doing bottom-up research to try to find good stocks, are at a rate of almost 2-to-1 just buy an SPY because it's huge, liquid, and it's not volatile. And I think these are just they reflect how quickly things change, and that's the important thing here. That you have to take gains, not chances. I know that's the first little trite saying that I had for Edge, but it's true. And the moment the data changed for AR, Antero Resources, the demand side ticked down, I sold it. I mean, I'm not going to sell it when it's down 8% because I know what the intraday volatility is. But if it's moving in my direction and I know that data has changed, and if it's not, I'm out. I mean, you just have to do that. I think it's very important to be aware of the data. So now I want to show you something here.
Hey, Tim.
Yes, please jump in anytime.
Tim, real quick on like energy you're just talking about. I think you said short volume is a 5-day rolling average.
Yes.
It's the same for demand. Is demand also a 5-day rolling average?
Yes.
Okay.
Both of them are. Yep.
Okay. Thank you.
Yep. You bet. Yeah. I mean, if we use the daily read right now in the broad market, we measure that. But I think central tendencies are very important. And because we've been doing this a very long time, looking at this underlying data, and patterns of movement change. It vary because not always, but they change in 5-day increments. That is a very consistent theme, and so that's what we use. I mean, if we looked at the broad market, this is broad market sentiment right now, and look at that, it's 49.2%. Actually, if you took the daily read, it's 50%. I mean, it's half the volume is long and half the volume is short in the entire S&P 500 right now. Which would be a record. Now there are some other. We're going to come back to that. I want to finish this comment about energy because you could go look at the data and say, so Monday energy was a good buy. By when just that quickly. Now by really yesterday, maybe the day before, but yesterday certainly, it becomes a short opportunity, and the math will work for you. I haven't put. I haven't asked the IT guys to make a short portfolio show up on your desktops. We could do it. I just don't. I would feel irresponsible because I don't know enough. That doesn't mean you can't set one up, and I have one set up. So it's just very interesting how quickly that changes. So here's my short portfolio, 5 stocks in it. Materials is the lead sector, but that's just whoever has 3 of them might be or something like that. But here's the thing. If you look at them, and the math is just going to look for converging supply and demand within certain parameters. I also put a liquidity read in there. I don't want stuff that is very difficult to get in and out of. And look at this, BHP Billiton, Valero, Marathon, Alpha Materials, or whatever it's metallurgical resources, AMR. And so the important thing here, and then there's JM Smucker, that was just math. This is what's fascinating to me. So if you were listening to CNBC today and, the oil's way down and, commodities are getting killed and there can be monetary policy reasons, I get all that. The math already told us. Even if you weren't paying attention to any headlines, the math would have already told us that. And so if you're good at doing those two things, I don't know if Kelvin's here or TJ, but they're folks who send me notes fairly routinely who are good at this stuff, and appreciate that you are. You could trade stuff long, and the moment the math tells you to go the other direction, you trade it short, and you could double your returns in theory. So I think it can work. When I'm not so busy that I can't keep up, then I'm going to spend some time and become better informed about that. But I know that it can work because the math illustrates it. So I wanted to make sure to point that out. The math will give you an advantage. It is ahead of the headlines. In fact, on Monday, you say, well, energy is a bad place to be. No, it was a very good place to be for 3 days. I made good returns on LPI, on AR. I forget what else in there, but those were very strong gains. And so then it changes very quickly. Okay, I wanted to mention that. Any questions, comments, observations about that before I move on to the next thing?
Speaking of the timing, I saw
Yes.
CELH the other day, and then you mentioned it in your note, but I couldn't tell exactly what the timing was on getting in.
Yeah.
I mean, I was a little confused because I knew it was volatile because it was like 5.5% or something on volatility.
Yes, it's very volatile and it's very risky. There's no question. There's Tim. Tim's another one who knows a lot about this. So hey, Tim, good to see you. Let's see here. Let me go back to, there we are. Well, I've made a lot of money trading CLH, but it's a risk. It is. I bought it, so I'm down today. Now, do I care? And you say, well, this is another thing I wanted to talk about: PEP, Pepsi, and CELH. So a big and stable and a momentum trade. And one of the things that we have been talking about that I said I would experiment with. Sorry, let Najee in there. Is do I still have? Oh, no, okay, we got it. I'm experimenting with whether you can buy momentum even when broad sentiment isn't great. And my experience so far, I think it says yes. I tend to take gains very quickly to answer your question, Raven. You said, what's the time frame? Well, so I'm not following the math. If you looked at the price, we'd say, well, the price is no good here. How can the demand side be rising and the supply side be falling and price declining? Well, the demand is an algorithm that takes into account behaviors and relative prices and how those prices are changing. I'm oversimplifying. So it may not work out. It might not. But I look at that and say, well, there's a good probability that if I can buy it at a fairly low range in its intraday volatility, that there's a chance I make money over 2 or 3 or 4 days. I mean, most of the time, that's kind of my range. And so we'll see. I bought it when it fell, and right now it's down. It's down 7-8%. So will it work out? Well, if it's up 5% tomorrow, well, I'm happy. I know it may not be, but I'm going to trust that math over the price, and it's very much like energy. That's really the point. The talk on Monday was energy's no place to be. Well, if I'd listened to that rather than the math said no, it's a good place to be, and then by roughly Wednesday, that now the math said, "Ooh, now you want to be short that." And so just that quickly, the math changes, but it's very accurate. And so it's not perfect, but I'm inclined to follow that math. And so, Raven, that I will find out. This is a little bit out of step from my plan, but I want to explain why I'm okay if CELH is down today. There are two reasons in addition to the divergence. There's a supply-demand divergence that's attractive. It moves, like you said, Raven, 5% or more per day, and you can see that. If you haven't done this before, this is what we're talking about. And then I want to talk about the other important things: divergence if you're going long, convergence if you're going short. I think it should give us one more thing here. Then context and broad market sentiment. I always think it's important to know where things are. So it's in volatile tens here. If I look at these, which was one of the things to do on the list here, and just look at each one of them, why CELH? Here's the 5.3% that it moves daily on average. I'm just taking, again, a rolling 5-day average. What's the spread between the intraday highest price and lowest price? Well, about 5%. So then if it's down a good bit of that, I know that if the supply-demand equation is working in my favor, probably I can make some of that. Doesn't work every time. It just works almost all the time. It's what I use over and over.
Tim, you said down, if it's down some percent, but from what point?
That's kind of it's whatever. I mean, I like it to be down at least half of the intraday volatility. If Pepsi's down 1%, well, and the supply demand equation is in my favor, all other things being equal, depends on where we are, I like that. If CELH is down 3, 4, 5%, I'll buy it in these conditions. Or, if we looked at Laredo Petroleum, which right now to me isn't a good choice, and I'll show you why relative to CELH, but that's how I think about it, Raven. It's a portion of that. Because I'm counting on the central tendency. The central tendency is that the price moves for CELH 5%, for LPI 6% per day. And so then if demand is strong and supply is weak, then all other things being equal, ceteris paribus in Latin, all other things being equal, the probability that I get a return is very good, because there's a chance in the next 2 days that it moves the other direction, because that's how we get the average. The average says, well, sometimes it's here and sometimes it's here. Well, if I bought it here, what's the probability, if supply demand tell me it's possible, that it's here? Well, pretty good. And I'm very happy taking that 2, 3, 4%. And I've been doing that very consistently here lately. It's been very good. We'll see how this trade works out. This would divot my returns if it doesn't work out, but I'm pretty happy with that. So here, I want to look at this. Here's CELH. Let's look at why, what's the supply demand equation? We're just looking at it. This will be a longer view, but same thing. Demand at 10, supply trailing off. Well, I like that. So I would risk that. And then you look at LPI. Why would I pick CELH over LPI? Well, there's the sector that would play a role. Energy now doesn't look like the right place to be. And if I look at this, demand is very good, supply is below trend, but see, the trend has changed. And so of the two, I would prefer the other one. It spent less time at 10, and the supply side still falling. And so that's why, to me, this is why I got out of these. As soon as the supply side stopped falling, I left. But there are other things where it had really jumped. So that's the difference between. And you could say, well, why not Ovintiv? If you're at 13 billion in market cap, $4,200 a trade, 5% intraday volatility. Why not this one? Well, here you can see it right away, right? Why wouldn't I buy this one? Well, it's spent 2 days at 10, just like CELH, but look at the supply side. Not buying that. Even though it's way down here close to 40%, not doing it. Out of this set, and you look, there are all kinds of stocks. You can say, why these particular 6 over the other 3,600 that are in the U.S. national market system? Well, I'm just letting the math do the work for me. I don't want to spend a lot of time looking for if I got the perfect stock, it doesn't matter. We're looking for central tendencies. AXSM, not bad. I mean, it's been at 10 a fair amount of time. Supply is below trend, but it's not falling. It's not falling. So again, if I'm picking, I'll pick CELH. Now I may be wrong, but that's my thinking, and that math has worked very well. Again, it won't work every time. There's something else that makes me comfortable, even if CELH is down sharply today, and that is the context. What is the context? I always say, think about what's going on in the market. The market is not a series of random events. Every day we don't start over at zero. It's got a calendar and a cadence to it. This is a new month. Futures contracts expired yesterday. Everybody's closet indexing. It's a huge deal. We already knew that supply was soaring and demand was plunging in the broad market. What would happen into an event that everybody's using? Well, the market's going to be down. It's pretty basic common sense without any look at what macro factors or economics might be affecting it. But now we're in a new month. What tends to happen in new months? Well, it's not an absolute, but generally people make commitments to their retirement plans. Not, it could be at different points during the month, but generally this is when money managers will put money to work. If they've got assets that have come in, they have to deploy them. If we give assets to our managed accounts, the financial advisors, their job is to deploy them on the plans that we have established. Well, I know that that's a little incremental opportunity. People may stop. People may not be putting money to work at the same pace. But again, I will say, well, there's a chance in the first 3 days that some of that money gets deployed. And I want to be in things with momentum, because if it comes in, all the passive vehicles and so on, they might benefit me. So that's what I'm thinking. And then third is broad sentiment. However you want to rank them, the BCD, broad sentiment, context, divergence. Broad sentiment is pretty miserable. Look at the plunged, and supply is extremely high, but it's below that green line. And if you go back and look, I'm just going to pick a 3-year period here. We know that statistically, one side or the other has to change for conditions to really improve in the market. But nonetheless, if we zoomed in, and I'm just going to look solely at the demand side, not the supply side, and look at all the times that it has been down below 4 and what has happened. Well, this was coming out of the pandemic, but the market rose. This is SPY. This is demand, the algorithm, 10-point algorithm. Here, below 4, what happened to the market? It rose, then it peaked. So you're out. Here at bottom, you're in. And I'm just picking up these 2 points. Right at 4, market rose. Right at 4, market rose. Low 4, market rose. It's breaking down there, but once again, most of the time, here's the weakest point. And this is where this was, I think, February, right? So this is where the market really had trouble. But again, the market rose. You just had to become more nimble. Below 4, market rose. It took a little bit longer here because of options expirations in there. Below 4, market rose. Below 4, way down. We know that's a huge opportunity, right? This is push all the chips in. Well, there's the market way up. Now where is it? Well, it's just below 4. I know that there's a probability of a near term, even if the broader conditions are bad and we further deteriorate and we set new lows. And I'm not saying we will or won't. It's not how I think about it. I just look at the supply demand equation and the math. And I know there are things I can trade. But this says to me the probability is that the market could recover off of that. We'll see. But those things give me comfort. So if I'm down 7 or 8% in something, I'm down 5 in CELH. Would I panic and sell it? No, I'm going to trust the math, and maybe I'll be wrong. And if one side of the equation or the other changes, then I'm out. But I think putting all those things together, we're always just thinking about the probabilities and what the math tell us. And the math is very, very good. It's not perfect, but it's very good. So other thing, an example here that I wanted to point out is Pepsi. This is the opposite side of the coin. This is a stock that is designed to preserve, and it's up today while the market is down. And it's because this is a stock that hews right at the axis of supply and demand of 5. And so if supply, and it's, that's changing, so it's flattened out. I will look now to probably remove, and I have a pretty large position in Pepsi, and it was down at the close yesterday because it went ex-dividend. So it's not that, and I don't, do I want a dividend from Pepsi? Not really, but it offsets that. That's fine. I'll get paid a dividend because I own the stock, and that's fine. So it's not down day over day. It's just that the portion of market cap represented by the dividend is subtracted. And so this condition tells me if the market is tumultuous, everybody's going to try to pile into the room called Pepsi. Well, so will I. It's a good place to be. It's not where I'm going to stay. But again, I'd look at that and say it's dollars are depreciating assets. So if I'm going to keep that depreciation as low as possible, that's something I'm going to do. And I don't really care what it does on a given day. It doesn't have nearly as much volatility, of course. And that's the point. We don't, if it's down 1%, I buy it. Down 1%, put some more in it. And now, again, I'm trading these things. I'm not owning them. This is short term, but so I'm only talking about for 3, 4, 5 days, but I'm certainly going to do that. So looking at it in the portfolio here, big and stable. Here's what I mean. There are only 2, Pepsi and Hershey. I've owned them both. 1.6% is what it moves. So if it's down 1%, there's a very good chance that it's up 1% or more the next day, and I'm perfectly fine with that. So then I made 1%. That may be all I'm after. Okay, so there are some other key things here that I have on my list yet, but that's a core of what I wanted to talk about before we get to additional examples. So floor is open. Questions? Somebody want to throw something out? Fire away. Okay, then so I've got examples, and I want to tell you too, I've got several notes here. We have talked a fair amount on these demos about being able to find this very short-term trend change in the supply side in short volume. And right now, as you know, it's you can't find that very short-term change. because of the way that the queries are built. So I've had the team working on it, and we're going to push that in the next release. And I can't tell you exactly what that will be, but internally, it's just a couple of weeks. I don't know. It may take longer than that. But we will add the capacity to find, say you want to find stocks that are, and we'll use these metrics in the, big and stable and momentum. There are no momentum stocks at the moment, and volatile tens, and only 6 there, only 2 big stables. Tells you, conditions aren't great, but there are still things we can do. But here we would be able to, instead of doing this, where you say, well, I want to find short volume trend equal to down. We add that rule, and I want to find the levels that are less or equal to, where are we? There it is. I would say less or equal to 50. I don't like to have, there are exceptions, but generally this is what I'm going to do. And let's say we want dollars per trade. I like liquid stocks. So as I've said before, that at about 4,000, you're in the top 1,000 most liquid stocks. I like that because it's easier to get in and out of them. And so I think that that's important because you can lose all your returns. And then you want to have the demand side, market structure demand. Let's see, we want to have it equal to, let's say equal to 10. So I want to find stocks that are at 10 but just got there. And so what I will do is say market structure sentiment equal to up, because that'll be a day over day change. Now there may be none of currently available, because that's basically what we're looking for in some of these queries. But now we'll be able to, with the short volume, say the 1 day trend where it fell for 1 day, 5 day, it's down for 5 days, and then the default is 30 days. But that should enable us to find those very short term divergences. See, we already know it. There are no stocks that meet that criteria right now, which is why, it's very, very telling. Yes.
Sim, a quick question. If you have the sentiment at 10, then
Yes.
the trend would be top. No, you wouldn't see 10 with an up, would you?
Well, there is now, because we made that change.
Oh,
we
okay.
redefined the meaning so that if it moves from, it's at 10 and it moved from 9 the day before, that would be an uptrend. If it spends 2 days. So in fact, if I change this to topped, now I probably can find stuff. I'm not saying I will, but sure enough, there are 9 stocks. And of course, it's pot, and sure enough, there's Ovintiv, Shockwave. These are CVR partners. Those are stocks showing up in the volatile tens portfolio. There's CELH. There's Axum. So it's picking. There's LPI. Hess too, but energy. It's probably changing. So the 30-day trend is down for all these things, but what's happening in the near term here? Yeah, so Hess has been a great stock, but it changed. It's not much of a deterioration. It's not like I think energy is going to fall apart. I think it's going to be a long trade again. The short trade may be very short-lived, but that little change there is enough to matter. When demand's rising up to 10 and the supply side's falling, that is the optimal, right? And so here the supply side's not falling. Demand's been at 10 for, 10, almost 10 days there. Yeah. So I hope that's helpful. Last thing, jobs data tomorrow. What do we know about what the market is telling us? Well, you can look at your dashboard, and it's not an absolute. And you could look across the core sectors to see what are the supply demand curves here, and then where's the market? Well, it's at 3.7. So if I looked at, I'm just going to hit, communication services. How's that look? Well, the supply side or the demand side's bottomed, and the supply side's flattened out. It's that's not great, but it tells you, well, is it going to fall more? Well, could, but probably not a whole lot more. Consumer discretionary, still a bad trend in consumer discretionary. That's probably reflective of all the people who think about what are people going to spend. And so that's not a great view. Consumer staples, I would say almost the same. The consumer stocks don't look great. That could be interesting. It could be a tell. It could be a tell that we get a negative surprise. in jobs data. I'm not saying that it will. I'm just saying that we're able to observe what all the smart people who are all consuming data and buying all the data and thinking about things and running macro models. All we have to do is look at what the money's doing, right? So that's kind of a read. Energy, we've already talked about that. Demand side's very strong, but it's tailing off. Supply side's up. Financials, again, not great. Converging supply and demand, not awesome. But the pace has slowed. Fangs, they if I look at that and say, well, they can't never say, well, it can't go any lower. But we're pretty close, pretty close with the fangs, I would say. Healthcare, not great. The demand side's bottom, supply side's still miserable, not great. That's that's consumer spending affected too, in part. Tech, not great, but it's not getting worse. And let's see, that gets us to real estate. Not great. So it's just about bottomed on the demand side. Supply side's not great. Then I think that takes us to utilities. Utilities, they've been okay, but that's not great. There's nothing good, but it's not like we're plunging off the cliff. We are closer in all of that data to a bottom than we are to a top, and to me, tremendous tumult. Again, I can't say what's going to happen tomorrow, but it will surprise me if at this point we lose another 1,000 Dow points. Again, could happen. I mean, I don't know, but all of that tells me if we had a negative jobs number, some stuff could bounce, because everybody will say, well, there's what the Fed needs, right? So volatile stocks could do well tomorrow. I don't know. I just follow the volatile tens math. But that's how to think. You can look across there and get a pretty good read on what everybody thinks about everything, and you could just look at the supply and demand. Okay, one last question, and we'll call it good for this time around.
Could you go over quickly the short portfolio filters?
Oh, yes, I sure can. Thank you for I meant to do that. So here's what I set up, and you could modify these criteria that I have used. And I'll go through here. I'll just click the edit so you can see this. And if you want to, you want to take a screenshot or something, here's what I did. I said, let's set up market structure sentiment demand between 8 and 10. But falling. What I'm trying to capture there is a downtrend. So stuff that may have been at 10 is starting to go down, so that the trend is down. I still want very liquid stocks because I don't know shorting. You could short stocks that will go down 12, 15% that have only $1,500 a trade. The trouble is if you go to cover, it may go back up 16%. That's the trouble. Those very illiquid stocks, the high frequency traders are going to know. They'll create a huge spread that your order will never fill. So then you give some and wham, the price goes up, right? So just beware of that risk. Short volume greater than 50% and the trend up. That's the core criteria. There are 5 criteria there. That's what I have set up to give me a look. And I think it's doing a pretty good job of showing us things. All the stuff that has showed up there has gone down, which is what you're after, right?
Perfect. Yeah.
Yeah.
Thanks.
You bet. Okay, good. Is that good? I've got a bolt to this thing that interfered with the usual time. So I've got to hit the door. Thank you as ever for doing this. It's always good to see you. And we will do this again on I think it's the 15th. Whatever, not next Thursday, but the Thursday afterwards. And I will hope to see you there. Have a good one. I'll report. I hope to have a tan the next time I see you from Hawaii. So we'll catch you then.
Have fun in Hawaii.
Will do. Thank you.